Hey guys, what's going on? Welcome back to the channel. So we're all feeling the pain of 2022 so far at the stock market. It is down roughly 20% year to date, officially being a bear market. And I'm sure that right now, a lot of you guys are doing similar Google searches to this, trying to find what's the best way to invest during a bear market. And if you take a look at some of these articles, they talk about stocks, real estate, gold, commodities, even cryptocurrency. So the plan for this video is I simply want to share with you guys how I'm approaching and handling this bear market, because all of us across the board are feeling pain and we're not alone. I also want to share with you guys a few of my tips for investing during a recession/inflation. And then finally, I'm physically going to show you guys my portfolio and what I'm doing. Okay, so coming back to this article on how to invest during a recession, we can see the standard asset classes of stocks, real estate, gold, so on and so on. And these are the things that we invest in normally. There's no big change here. And that's a point that I really want to drive home. During a pullback like this, in fact, if I go to year to date, we can see the full extent of the pain. It's very tempting to want to change things around, hop in and out of different asset classes to try and avoid the majority of the pain and find that one silver bullet asset that's going to protect you during this time. Unfortunately, the reality of being an investor is that these market cycles happen. There's really no way to avoid it, and long term, if you buy and hold and you stay firm to your plan, you should be okay. And later on in the video, I'm going to show data to back this up. So if you're investing in high quality stocks like the S&P 500, all because it's going down a little bit in value, doesn't mean that you made the wrong choice and that you have to switch. In fact, that can be a dangerous trap. In fact, if I come to my list of how to invest during a recession, the first point here is that there's no magic asset class that's going to protect you from the pain, because the source of the pain is systemic all throughout the economy, right? It's rising interest rates and inflation. At the current moment, it might seem like some asset classes, like stocks, are getting more beat down than others, say real estate. But the real culprit here could simply be that assets are more liquid and they react a lot faster. In fact, I wouldn't be surprised at all if in the next couple of months and years, the real estate market has a similar pullback that just takes longer to happen. And that ties into my second point, which is don't get caught 2 steps behind. You don't want to dump out of stocks at their bottom to jump into real estate just for that market to also crash. Again, there's no silver bullet here that's going to protect you from the pain. It's just something you have to go through and learn as an investor. We all know these statistics that trading in and out of assets long-term really isn't that effective of a plan for the majority of people. And that's why my third point here is mindset. You have to have the right approach as an investor, focus on the long term, have a goal, and stick to it. Now, I know that's a lot easier said than done, but as an investor, as you gain experience and you go through times like this, you learn not to panic. And to help put that in perspective, I pulled up a chart here showing the resilience of the US stock market over a long period of time. And highlighted on the chart here are a ton of major crashes and events throughout history. And of course, in hindsight, it never seems like a big deal, but some of these are pretty massive events like Black Monday and the Gulf War. In fact, we even have some things here that look pretty similar to the modern day, like the Fed having a tighter monetary policy. And each and every one of these events is very difficult to go through. Some of these declines are very sharp and significant, and these vertical bars here highlight the different recessions throughout time. But again, if you have the proper mindset and you stick to your long-term plan, zooming out, you can see the overall trend here has always been up and to the right. In fact, just about every one of these crises in the market represents a great buying opportunity to have outsized gains in the market. Now again, in hindsight, it's very easy to say, but in real time when your portfolio is down thousands of dollars, it's difficult to actually enact that strategy of buying the dip. And that's why my final point here is potentially the most actionable, and it's to simply have a tighter selection process for quality during a recession. So ideally you want to keep dollar cost averaging, keep your long-term plan in mind, but during a recession, you might want to take a slightly deeper look into what you're buying and ensure that it is quality and it can survive. That's definitely going to help you to buy the dip during tough times and sleep better at night. In fact, one of my favorite metrics to look at to help me buy the dip is the VIX, and this is just a measure of fear and volatility in the market. And when the market has a crash and there's uncertainty, it tends to spike, and when there's a bull market, it tends to drop. And there's a ton of data on this, but historically, when the VIX is above 30, 35, that is a prime buying opportunity, historically speaking. And for the past month, it's been hovering around 30. So if you use this opportunity to continue to dollar cost average, it could set you up for better returns in the future. Now, if you come to my portfolio, just like everybody else in the market, I too am experiencing a lot of pain. But my long-term goal with this portfolio is to generate a stream of passive income and give me financial freedom. That's why this is called the Freedom Fund. And if I filter by the past 1 month, I received $186 of pure passive dividend income, and that's the highest ever, I think, for this portfolio. Now, of course, this isn't my final goal. My next real milestone is $1,000 every month in dividend income. So to me, when the market goes down 20% across the board, I view this as a great opportunity to help speed up the timeline in which I can accomplish my long-term goals. Because compared to the beginning of this year, every dollar I invest now can buy me more equity in an asset. And that's why if I come to my activity page, on the 13th of June, I invested another $2,000 going evenly into XYLD and the S&P 500. Now, of course, seeing all this red is difficult. It's not a fun time, but we're all going through it. And it's just part of investing. And the more that I gain experience, I've been investing for about 7 years now, the more that I realize that this is the price of admission to be able to fully participate and be positioned well for the next bull market. So that's my advice to you guys during this rough time in the market. Remember your long-term goals. There's no magic asset that's going to protect you from this pain. And if you zoom out and try to gain some perspective on the situation, there's constantly different economic crises going on, and we always get through them. But of course, that's just my opinion. Let me know your thoughts in the comments down below and what you're doing with your portfolio currently. If you're still watching and enjoyed, I appreciate a like on the video. Go ahead and subscribe, and I'll see you guys in the next one.